Okay, MegaWhale team, welcome back to the channel. Thank you for tuning in. I hope you're all having a fantastic day today. In today's video, we are taking a look at Bitcoin's macro price action, weekly and monthly candle close, the short-term price action, historical returns and performance for Bitcoin during the month of September, and of course the upcoming economic news this month. Before we do get into it, smash that like button, hit that comment button, and subscribe to the channel. We post daily videos of Bitcoin focusing on the facts, the data, the technical, and the structural information. No hype, no BS, no emotion, pure raw TA. That is the kind of content you are interested in. Join us on Telegram. It is the first link down below. You'll get access to charts, updates, videos, educational posts, news events, and everything you need to stay in the loop with cryptocurrency with Bitcoin and the relevant economic news. If you were interested in taking your trading to the next level, join us in VIP. We post trading setups with exact entries, exact targets, exact stop losses, trade justification, exclusive analysis, and so much more. You'll also get access to our trade channel, our general chat, trade chart and education chat, news, help, daily video, and trade setup chat. Once more, every trade we do post comes with exact entries, targets, and stop losses. To find out more information, contact me in the pinned comment of the free channel by clicking my name or these links for more info. With that being said, let's dive on into the video. So taking a look at that market data, 24-hour volume coming out of the weekend is surging 120% at $100 billion on the dot. 24-hour liquidations up a massive 499% at 162 million. Of the 162 million, 138 million have come from long positions and 23 million have come from short positions. On the short-term price action and during the last 24 hours, not all that much has occurred for Bitcoin. However, during the last 4 hours, we can see Bitcoin has been struggling a fair bit, wicking down into this critical level of support between 58,000 and 57,300. In fact, we can see now Bitcoin has actually closed a 4-hour candle underneath this line of support. The prior time Bitcoin did that was all the way back in August, mid-August, August 16th. So a pretty brutal correction over here for Bitcoin in the short term. We'll be discussing much more about what this means when we get up to our short-term analysis today. Moving over to the DXY. The DXY, again, we talked about all this stuff in our prior video, but on the macro chart, we can see the DXY is now moving upwards to likely retest that yearly uptrend. And of course, as we know, as the DXY moves upwards, we do generally see some corrections on the risk asset market, and we are expecting the DXY to move upward to retest this yearly trend. Thus, we could see some confluence here for further corrections for Bitcoin, some short-term pullbacks, which we'll be discussing in today's video. But let's just assume the DXY does move upwards to retest this trend line. This would be a likely rejection point before a continuation back downwards. Of course, we do have some major economic news coming out this month, which can massively determine and even change the directional expectations on the short-term and macro for the DXY. So although we are taking this symmetrical triangle breakdown at face value, we are taking it with a grain of salt, knowing that we have some major economic releases coming out very shortly, which could influence the directional moves for the DXY. If we're looking at it from a structural perspective, we are expecting a rejection and retest of that yearly uptrend, and thus we are then expecting a continuation lower. This move downwards would be invalidated if we are able to reclaim and sustain above this yearly uptrend. If we are zooming out to an even higher time frame here, you can see a breakdown of this macro symmetrical triangle formation. This is a 1.5 year consolidation. We could see a very large move toward the downside as a consequence, which would massively push risk assets upwards, start to pump up inflation again, and lead to a potential asset market rally, something we are watching very closely. Moving over to the economic news, we have some major events coming out this month. Notably, we do have interest rate data. This is going to be on the 19th of September, quite a while away. Projections are 67% for a 25% cut, and 33% for a 50 basis point cut. If we're taking a look at the rest of the economic data, moving closer to the start of the month, we have got retail sales on the 17th. If we come down to the 12th, we have got our PPI data. The 11th, we have got our inflation data. And of course, those are really our major ones. We do have other events such as NFP and unemployment rate data on the 6th, which is also notable in regards to potential influences on the short-term price action for our asset markets. Pay attention to all of that. Finally, moving over to the S&P 500 on that weekly chart. We can really zoom in over here and take a look at what is happening. Not too much movement here on that last weekly. We did see a pretty decent close on that prior weekly. These bodies are starting to shrink. This is an indication that we are potentially starting to see some degree of exhaustion in the price action as the buying pressure is starting to reduce as we approach that weekly level of resistance. Once more, we do expect a macro continuation higher only if this prior high point is able to clear. Until then, we are approaching resistance and there is going to be a possibility for a correction back down towards these lows. 5,300 being the major support level. If we were to drop below 5,300, we would enter a high time frame downtrend. But provided we sustain above, we are expecting the macro move upwards to come at some point. That is it, guys. Let's jump into Bitcoin. Now, before we do, if you were interested in 15 to 45% off lifetime discounts for your trading fees, sign up to BitUnix, BitGet, or BingX down below using my links. You'll get a very healthy sign-up bonus of around $5,000 by completing a couple tasks if you do so. But of course, that lifetime trading fee discount can save you $10,000, $100,000, if not more money. It's saved me well over 6 figures. Check it out. I'll play an ad and we'll jump into the rest of the video. I'd like to introduce our partner, BitUnix. BitUnix is a global, non-KYC, no country restriction exchange, making it a perfect exchange to trade on if you're from the USA, from Canada, the Netherlands, or just prefer to trade without KYC. This exchange is a futures and spot exchange with over 200 different trading pairs, and some of the lowest fees in the game. If you sign up with my link down below, you'll get access to 15% off your trading fees, as well as an exclusive reward center where you can claim up to a multitude in USDT prizes. So go ahead and sign up with my link down below for 15% off, and I'll see you in there. Okay, legends, let's go ahead and get into it, and we're going to be taking a look at the monthly chart first, discussing that recent monthly candle close, and jumping into the weekly, jumping into the short term, coming back to the macro charts, and wrapping it up. So, the recent monthly candle close, was it bullish, was it bearish? Let's dive into it. As we can see, guys, the recent close closed at a price of around, let's take a look, it was around 58,942. This would be considered, from a price perspective, a pretty neutral close. If we're looking at the candle itself, that specific 1 month candle, that was a undoubtedly bearish month, right? We saw a significant pullback all the way down to a price point of around 49,000. We saw a high point of 65.6, a month of massive volatility, but mostly downward price action. So we did have a bearish August. If we're taking a look from a structural perspective, we were able to close that monthly candle above that prior monthly high. This is going to be our pi cycle monthly high, and this is going to be our all-time high for 2021. So we do have this range of support right over here between the price point around 61,200 and 58,700. We did close at 58,900, so just within this region. This is, of course, indicating, although the monthly candle was terrible, and it was terrible, we were able to still close within this support range. That is going to be our monthly candle close. It is suggesting we have this downward pressure that we could see extend into September, which we'll discuss in a second. Overall, a bearish close from a perspective of the candle. From a perspective of the structural levels, a relatively bearish to neutral close. So the good thing is we were able to sustain this level of support, but that does pose the risk now. Are we going to see our current September close below? And if we do, that would be pretty detrimental. Or are we going to see a close above? And again, we will only find that out in 29 days from now. If we take a look now at the monthly data, historical returns for September are actually quite bearish. In fact, September isn't the most bearish month in terms of expected percentage pullbacks, but it is the month of which we are most likely to see a red month. Meaning if we look at the distribution between green and red months for September, it has the highest amount of red months in comparison to green months, and therefore we are more likely than not going to see a red month. Now, this is not by any means a absolute assurity that we are going to see a red month. There are, of course, scenarios within here where we do see green months. And of course, we do have the interest rate data, which could result in a rally for Bitcoin upon release. We are not entirely sure about that. We have to play that by ear. But if we're looking at this from a purely analytical perspective, should I say, we can say and we can state that statistically, based on mathematics, we are more likely to see a red month, and the consequence of that would, of course, result in a monthly close underneath that prior monthly high, which would be a bearish breakdown of this support level we have been sustaining above since February 2024. Something to keep in mind. Let's go ahead now and take a look at the weekly. The weekly candle close, again, a very, very bearish close. In fact, one of the most bearish closes we've seen for a while. We fully engulfed that prior weekly, completely and utterly engulfed that weekly, what we will call a bearish engulfing candle. And this is, of course, a candle that moved from around 64,000 all the way down to 57.3. So a horrendously bearish month, weekly candle close here for Bitcoin. And we're discussing what that means in just a moment. Let's move over to that daily price action. As we can see, the daily price action is still, and I would say regrettably, which is getting quite boring now, within this macro consolidation, right? This macro descending channel formation as represented by our downtrending diagonal resistance and our downtrending diagonal support level. While we are in the confines of this consolidation, the price action can quite literally keep going sideways until we make a directional break over the high or a directional break under the low. What we can see here, and what we'll be discussing in the short term, is that we are entering this lower historical resistance range on the VRPV. And I'll discuss this in the short term when I get up to it, but we have very little short-term support currently where we are sitting before we do pose the risk of another flash correction for Bitcoin back into that range low. So that range low now is becoming more and more possible as Bitcoin pushes lower and lower on the short-term chart into this VRPV gap. Something to consider. But looking at the daily chart for what it is, the daily chart is still going to be a macro descending channel. Macro descending channels being bullish consolidations. Bullish consolidations have the expected bullish outcomes. When we do see that range high break toward the upside, we are expecting a macro continuation, and only upon the break of that range high would we then expect that directional continuation lower. Only upon the break of the range low would we expect that macro directional range high continuation to be invalidated. So while we remain in this descending channel, although the short term is looking grim, although we have been in this downtrend, the expectation is still a directional continuation upwards. That doesn't mean you should be positioning yourself for this move, because this move would only be triggered upon the break of this resistance, and Bitcoin could quite literally keep chopping until you lose patience or get chopped out before we ever see that continuation. Not that I think it's going to go on that long, that's purely an example of what we have seen during this range over here. So for us to see a directional continuation downwards, we would need to invalidate this lower support level. To do that, we would need to see a daily candle close underneath that low to see a continuation. Again, the reason why we say daily candle is because we have not yet seen a daily candle above or below the range low or range high yet, and therefore a daily candle would be a data point in which would be an outlier in comparison to what we have seen during the last 5.5 months, and we could use that outlier as a potential justified cause for a continuation. If we take a look at the macro charts, we'll get into the short-term charts in just a moment, we are watching some very important levels. Now, Bitcoin is getting into that crunch zone. And that crunch zone is simply going to be that danger zone, or that zone of ultimate decision, I would really say. And we can take a look at a few indicators. The first one I want to show you here is one we've been taking a look at for a while, and this is going to be our RSI. The RSI, guys, an indicator of massive significance. We can see the downtrend on the RSI is a representation of the momentum moving downwards during the period of which Bitcoin has been in this downward consolidation. Okay, so in other words, we can see momentum has been decreasing. We have been losing strength while we have been moving in a downtrend, as expected, right? That's not too surprising. Now, if we were to see this RSI break this uptrend, that would then indicate momentum has flipped back positive. If we flip back positive, that would increase the probability for a directional continuation through this consolidation. Awesome, good to know. The next thing is, we do need to see that occur prior to a breakdown of this horizontal low. A loss of that horizontal low on the RSI would indicate that we have got, in comparison to the price low, which was over here when we created the low, the momentum at this point would be lower than what we saw at this point over here, and therefore it could indicate we are overextended in the price and we could see a continuation or a correction down for Bitcoin. That would be a crash warning if this level broke, and this would be a rally warning if this level broke. Those are levels I want you to pay attention to. Now let's go ahead and jump over to another chart. This is going to be our 2-week chart, not the RSI, but we are taking a look at the Ichimoku Cloud Indicator. Specifically, we are watching the baseline. Now, this is basically going to be our bear market signal, right? This is our bear market trigger if we were to break below. So a lot of people ask, when are we going to a bear market? When would a bear market start? Well, I'm going to tell you, if we drop below the baseline of the Ichimoku Cloud, this red line, which is sitting, not coincidentally, at a critical area of high time frame support, a loss of that level would, by definition of what the baseline represents and what we have seen historically, send Bitcoin into a bear market. Take a look. The prior bear market started here, under the baseline, to the low. The prior bear market started here, under the baseline, to the low. If we were to drop below that, we would very likely enter a new bear market. Watch out for that, guys. Something we are paying attention to. Now we can use that on the inverse. Being a bear market trigger, while we are above it, we are in a bull market. Look over here. Above, we are in a bull market. Okay, awesome. Above, we are in a bull market. And finally, above, we are in a bull market right over here. In a bull market. So we can use it on both instances. If you were simply too long upon the break and short upon the breakdown, you would have a pretty good hit rate on the high time frame. Not saying to do that, but you can look through a chart historically in reference to the 4-year cycle with those breakout points. It's a pretty accurate bet in regards to directional continuations. Let's go ahead now and jump into the short term. The short term price, as we said, is really flirting with that bottom support line. Now, the reason this bottom support line is so important, as we briefly mentioned moments ago, is because if we lose this low, we enter a period of low historical resistance. The VIPV falls off a cliff, essentially to 52.53, which lines up with the low range of our descending channel formation, right? So we can say that if we were to lose this low point, the probability for a correction for Bitcoin potentially to 54, even a little bit lower, the 52 range now, becomes significantly greater. And therefore, this is going to be our structural support before a potential correction for Bitcoin. And thus, we would like to sustain above this level. So we're watching very closely. This is a strong support. Do not mistake it. It is a strong support. It's been a support since the start of August. We've retested it numerous times. If we drop below this level, we could see a flash correction of 56. If we drop below 56, we are seeing a move into this gray box between 52 to 54,000. I do not think this move is particularly likely. I would like to assume, again, support is support until it's not, and therefore I am more under the impression that we are going to bounce from this region and continue upwards. However, I am very much aware that if we do not manage to hold on here, and we are right on the edge here, we are going to see a correction for Bitcoin. So it is a very risky move. If you are trading this range here, if you're hoping for a bounce, you are really catching that bottom point over here, that falling knife on the short term, expecting that rally. There's not much downside potential over here for Bitcoin before you would need to swap your bias and then it move toward that downward move. But again, we are at support. And if we do drop below, you have a very, very tight and very clear invalidation. Just watch out for those liquidity wicks. For Bitcoin to really then see that move upwards, we are watching, some of these downtrending trend lines. We are watching this downtrending trend line extending from the top. We are watching this shorter time frame downtrending trend line extending from that prior retest of the high resistance. We are watching those levels to really start to clear before we then expect continuations upwards. Until then, we are still very much within this chop zone, within this range we've been moving in now for about a month and a bit. So pay attention, guys. Be very, very cautious, again, as we do move into economic news, particularly as we move into the 19th. There is going to be, which is interest rate data, there is going to be a whole heap of emotion, okay? Whole heap of indecision, and we're going to see that as an expression in the price action. But most importantly, a whole heap of institutional playing, big firms, and manipulation, okay? There is going to be a lot of it. So pay attention. This month is going to be a tricky one. This month is probably going to be one of the trickier months we've seen for a while, okay? So as we approach those news events, manage your risk. Maybe try focus on the bigger picture or the shorter time frame. Don't try trade these ranges too much, okay? Because they're very, very choppy. Tight invalidations or bigger picture, one of those two. Thanks for tuning in, guys. Catch you guys in the next video tomorrow. See you then.